Welcome, everybody, to another episode of Tell Me Everything. I'm your host, Danielle Spinelli. As I am no longer in the trenches and covering freight myself, I have to learn from others on what's actually happening. So I like these pulse checks. I like it whenever I see things on LinkedIn of like, oh my gosh, I'm having a hard time with capacity. My rates are increasing. Fuel's going up. I mean, obviously, I guess I see fuel going up as I go to the pump, but I still don't get to live and breathe it anymore. And I kind of miss it. I mean, I don't miss working until 7 p.m. trying to get that one load covered that you're begging and begging and begging and begging a carrier to take. But for all those who are going through that and struggling that, I feel you. Been there, done that. But that's why I wanted to have Dawn on with formerly Green Screens, now Triumph Intelligence. They were recently purchased, or I guess it was about a year ago. So most of you guys should probably already know that. But I wanted to hear, what exactly is going on with the market? How are things changing? And what does that mean for the future? Like, how should you guys actually go in and, do RFPs or predict this or put in spot freight and things like that? So it was interesting because a lot of it was, fuel obviously was a big thing with the war that's happening. But I think also just knowing what was creeping up before then and all the different, lawsuits that are pending. And so it'll be very interesting going into summer, really like July, where we stand. So I think kind of everybody's like in that wait period. And Dawn talks about that too in this episode. So yeah, let's go ahead and jump in it. And I'd love to hear you guys' feedback on what you guys are dealing with on the front lines. Let's jump in it.
Tell me everything.
Tell me everything.
And I really appreciate it. I've been wanting to have you guys on for a minute here, so I'm glad it worked out.
Yeah, absolutely. It's great to be here. And congratulations on your new gig and all your personal success as our own industry's own fraud fighting superhero.
Yeah, it's been quite a wild ride. And like having, I don't know, I guess like being like a woman in logistics and I have all these ambitious goals and I want to do all this. And so it's been pretty cool, like forefronting it and then having, I don't know, a bunch of the guys being like, hey, how are you doing this? And how this, or I'll see them copying the superhero thing or doing that. I'm like, that's me. But
Yeah. I'm the OG. I'm the OG superhero.
yeah, exactly. It's funny because, there's been a lot of that lately. And I'm like, I have to keep reminding myself, like, I don't own superheroes, but
Yeah. Well, look, you weren't self-proclaimed either. I believe it was Nate,
yeah.
right?
Yes,
Yeah.
it was.
Yeah.
Yeah, I know. It was funny because whenever I went on, like at BCS and went on stage and I had my face on my body, I'm like, I promise I'm not this full of myself. I'm just naming myself a superhero name. It wasn't me, but
No, you were dubbed. You were dubbed a superhero.
yeah. Well, awesome. So a lot has changed for you guys in the past year too. So you guys were acquired. When was that? I guess it was right at a year now.
Yeah, well, so the deal closed on May 8th, right? But we announced the deal at the end of February of last year. And because Triumph is a bank, there was all these regulatory things and publicly traded, there was all these regulatory waiting periods that we had to go through. But we closed the deal in, I think it was May 8th of last year. So coming up on a year here, it feels like forever in a good way. Feels like a
Yeah.
lot longer than that. But what's changed? I guess everything and nothing all at once. So obviously very different being part of a large publicly traded company as opposed
Hmm.
to being a scrappy little opinionated startup that Green Screens was, right? Certain decisions take longer, certain decisions happen faster just because we have more capital and flexibility to make those decisions. The team has largely stayed intact. Triumph brought over everybody on the team and some people chose to leave on their own, and that's fine. We miss them, but personal choice. But for the most part, the team is intact. What's been really most exciting is just, being part of the Triumph network now and having access to more data
Yeah.
from the Triumph payments and factoring and audit businesses and being able to leverage that to enhance the Green Screens product or the Triumph Intelligence product, making our rates better, bringing some new products to market around capacity. So it's been a really exciting year. And not only that, Triumph acquired ISO in December of 24. As we were integrating Green Screens into Triumph, we were also kind of merging ISO and Green Screens together as part of that. So I think of it as bringing really three organizations together, Green Screens, ISO, and Legacy Triumph, to form what is now Triumph Intelligence, right? So
Yeah.
we accomplished a lot in a year. So again, merged the organizations, people, processes, technology, all of those things. We consolidated the ISO and Green Screens products on the broker side, right? So now
Yeah.
green screens is price, performance, and capacity, right? So plus introducing some new products, plus integrating all of that Triumph data. So I'm a little tired right now, but it's been a
Yeah, product wise, I'm sure it's super cool. Like I met the ISO guys like I don't remember exactly when it was, but it's been about a year and a half ago. And they were explaining to me their product and just how that scorecard works. And it was pretty fascinating, just like how much detail that they get and how really needed, how much I don't even know how to say this right. It was so needed in the industry.
sure.
And so I think having that at like a grander scale, because I don't think that they could scale as much as being part of a product like, like Triumph Intelligence.
Yeah.
So I think it makes sense.
Yeah. I mean, look, the challenge with the performance data is it requires a lot more data, right? So if you want to truly calculate an accurate on-time pickup, on-time delivery, there's a lot of data that you need, right? So it's not just what was your appointment date. You need appointment date and arrival time and departure time and all of those different dates. And look, not all TMSs can provide all of that information, right? There are a lot of
Right.
TMSs that are just very basic by design in order to minimize mouse clicks and keystrokes for the brokers, right? Because you're just jamming them through every day. So that's the biggest challenge. But when we can get that data, it's pretty darn.
Yeah. And since green screen's been around, or sorry, I keep saying green screens, Triumph Intelligence has been around for a minute. I mean, your guys' rates are able to really predict like market changes. And I know we've seen that a big flux here recently, especially with like the Iran war happening and, pricing and all that stuff. So I guess what are you guys seeing on that front? I guess pulse check on what's actually happening because I'm not in the trenches anymore. I wish I was, but I hear things and I'm like, I want to know what's actually going on.
Yeah, I mean, look, we green screens came to market in 2020, right? So it was like we came to market during almost the peak of inflation, right? The COVID inflation era. And then, we all know what happened after that. So
Uh-huh.
we've had the luxury of the past 4 years kind of bouncing at the bottom. And yes, our rates were reactive to those market shifts that we were seeing and things like weather events and things like that, right? We were definitely reactive to that. And one of the things that's really unique about us, well, we're predicting forward, right? So we're not necessarily saying what happened, we're saying what will happen, right?
Yeah.
And we're getting that real-time data from our customers at the time of booking, updating that data now as part of Triumph with the audit and payment information to make sure we're showing really real information. We've always had the ability to adapt to things like that, but I'm not going to lie, the past few months with kind of the reintroduction of more volatility into the market, the algorithms have been tested in ways that we've yet to experience, not just as green
Yeah.
screens, but well, I don't want to say yet to experience as a market, but it's been a long time since we
Yeah.
have experienced it. So, we've been throughout that. We noticed it right away. It's like, okay, we are not keeping up with some of these shifts as well as we would expect to. We've done some R&D through that, and we've just rolled out some changes that are allowing us to be much, much more adaptable in near real time to what is
Really.
happening at the time of the booking in the market. As far as rates will go, look, on the market in general, my outlook is this feels different. I've been around for a while, in freight for about 34 years, been through a lot of cycles, seen a lot of regulatory changes.
Uh-huh.
This cycle feels different with a little bit of wait and see, right? So I think depending on where we want to talk, it's either this feels different or wait and see or a combination of both. I think rates is really a combination of both. To kind of put it all in perspective, we would need to see well over a year at the current rate of inflation to get anywhere even close to COVID levels of rate inflation,
Gotcha.
right? But the month over month increases that we're seeing are close to the trajectory that we were on with COVID. I am by no means saying we're going to get back there to that peak, but right
Right.
now we're close to, the month over month changes off the chart for flatbed for a lot of reasons we could talk about. But as of our weekly readout from last week, so we do a weekly readout every Monday, but we have daily trends in the application that we published that customers can watch. But as of last week's readout that we got on Monday, spot rates are still creeping up. We're seeing some earlier than normal seasonal demand, particularly for flatbed, but in general, mostly tied to construction and agriculture. Rate movement is uneven across regions, but the overall direction continues to trend upward.
Yeah.
With the most momentum again in flatbed. I mean, van as of Monday, and we'll get another report. And I did look at some of the daily updates, but week over week, van was up 1.4%, month over month. 3.1%, 21% year over year, which is super exciting to see, right? Reefer
Yeah.
up week over week, 2.3% month over month, but 22% year over year. So, I'll wait and see how this week wraps up. But as I look at the daily trends for this week, I think we're going to continue to see week over week changes at or likely above those levels, excluding maybe some localized short haul markets.
Hmm.
But that's what I'm kind of seeing in the daily trend reports. And I don't see that ending anytime soon. Right now,
Yeah.
the other thing we're looking at is contract versus spot, right? And we've, sat again for many years now, 4 years, with the spread between spot and contract rates being really minimal. But that spread has been widening over many weeks since the fall. I think it started widening a little bit going as far back as the summer, but really started showing some consistent dispersion going back to November. And the gap is getting wider, and that's definitely putting some pressure on shippers and brokers that are operating under contracted rates.
Yeah. So I've been in freight for 11 years and I was a broker for 8. So like I definitely saw those cycles like year round, and that's why it was so important to have like your carriers that you worked with all the time. You took care of them in your time, and that way they would take care of you in their time and stuff like that. And so I just think it's at the time we never had rating tools, and it was like basically we just like we're looking up like what's posted, and that's kind of how we bid. And we definitely had contracted, but we also did a lot of spot freight. But I think and at the time too, it was mainly we made most of our money off of spot, and contracted was just keeping customers happy. But a lot of times we took losses on it because we knew that we wanted that spot freight, and that's kind of how we kept
Right.
feeding ourselves. It would be interesting to see if it actually goes back to that. But to me, and everybody's like, well, we'll see what happens with the market and all those things. But I think there's been so many different changes like back to back to back that it would take a decent amount to actually flow back, because it's not really just the price of gas that's
Mm.
made all those changes. Like we've been seeing it prior to that, right?
Yeah, no, absolutely. I mean, diesel is definitely in the this feels different category. But look, I think even in the last 10 years, we've seen a lot of changes, right? As
Hmm.
far as the volatility, I think in many ways automation has taken a lot of the relationship
Yep.
piece out of it, right? Which I think needs to come back, right? I think this market cycle might make some of the automation that has been put into place over the last 10 years require human intervention again, right?
Yeah.
Because things are going to be so crazy. But yeah, I mean, let's talk about diesel. So if you look back to the beginning of the year up until the war started, um, highway diesel prices were already rising on average about 1.5% a week, largely driven by tighter than usual inventory because of the winter weather events that we saw in January. And it was actually the 2 weeks prior to the beginning of the war that drew that 1.5% average up because they were both over 2%. But February 28th, which was the first day of the war in Iran, essentially became the last defensible baseline for
Mm.
contract assumptions and normal fuel fluctuations. And, I mentioned the automation over the last 10 years. The other thing that has happened over the last 10 years is brokers are taking more of the routing guide or the contracted market share from asset-based carriers, right? 10 years ago, it was, mid to high single digit market share as far as what brokers had for shipper routing guide freight.
Yeah.
Now that's in the low 20%, right? So that's huge. And that's really been over the past 10 or 11 years. So, fuel becomes important. And going back to February 28th, that's the last kind of defensible baseline. And everything after that is going to reflect a structurally different cost environment. So that's February 28th is likely the last day that the freight market priced freight without a fear premium
Yeah.
baked into it, right? But that pain doesn't necessarily show up immediately. It shows up a couple weeks later in rates, right? The biggest shock in fuel came during the week of March 9th, which was about a week and a half after the war started. And this is where fuel really started moving much faster than market prices, right? So freight rates were already moving up. Again, we saw that going back to really the fall, but fuel started moving much faster than rates were at that point, right? And then if you think about the planned release from the petroleum reserve, right?
Hmm.
That's anticipated to drop the reserve to the lowest level in 44 years by July, right? So a lot
Wow.
of this is the current price shocks that we're seeing, I think are largely being driven by that fear premium. It's yes, there were earlier tangible supply losses because of the weather, but I think there's a lot of intense speculation and fear about future supply shortages, which is being built into this, right? I think if the Strait of Hormuz remains closed long term, that'll change, right?
Yeah.
But some say for every dollar of fuel, it's 15 to 20 cents per mile to the rate, right?
Right.
So at this point, rate inflation has exceeded fuel increases. So while it's additional, it's definitely not the sole reason for rate increases, right? Those rate
Yeah.
increases are happening before.
Yeah, because I think so before then, it was kinda like the big all of a sudden CDL non-domicile CDLs were a big thing, the Delilah's Law, and there's, like, a bunch of other different factors that, like, we're losing capacity left and right. It kinda felt like it for a minute. I don't feel like we fully lost capacity. I think they just shifted to different like, went to straight trucks or they shifted around. They're not gonna just not work or leave, I guess. A lot of times they're still here. I think that was probably I guess, is that's kind of what we're referring to whenever we say prior to the war of what kinda changed, or is there anything else that I'm missing?
Well, so prior to the war, the supply shortage was really more on oil or fuel or
Yeah.
oil, petroleum in general because of the weather events, right? So
Gotcha, yeah.
was a mild supply shortage, right? That was causing some increases, but you're not wrong. I mean, capacity supply, yes, Delilah's law will have an impact on that if it even passes, but you
Yeah.
know better than I what that is, right? It's hasn't passed the House yet, hasn't even gone to committee in the Senate. They're still going to need to reconcile the bills, even if they both pass them. So who knows what's going to happen? If it does happen, it'll have a huge impact, right? And again, you know better than me, Montgomery versus Kareem, that,
Right.
that's not going to be decided until June. And those two things together will likely have a huge impact on capacity. But you're right. There's no driver shortage. Don't know where they went. Right.
Right.
But so yeah, those two things I said, wait and see versus this feels different. I think capacity is wait and see. If
Yeah.
these things all happen, yes, it is going to be huge. And
Yeah.
who knows, maybe it is near COVID level impacts on rates.
So if I'm going in and like, contracted rates, and I think a lot of people are actually going back and renegotiating their RFPs to try to get more money for what, they did get. Some of them are just taking the losses, but some of them are actually renegotiating. Should we add in that, I guess, fear percentage in there of like, hey, if this does actually happen, this, but, also then you get to the point where you're like, well, am I going to lose lanes? I guess what are some things that you guys recommend whenever it comes to I'm bidding? What do I do?
Yeah. I mean, look, I think we're weeks away from any type of normalization of inflation for both fuel and rates. February margins weren't bad. March is looking better, but anytime rates and fuel raise, it immediately puts the squeeze on margin, whether that's
Yeah.
spot margin targets or contract. I think, what you see is whether it's capacity being constrained or whether it's fuel prices, carrier behavior changes, right? Carriers become more lane selective, not rate selective. Their acceptance behaviors are going to change. Preferred carriers may mysteriously disappear
Yeah.
on some of in the fuel situation, more fuel sensitive, long haul or deadhead lanes, right? Where they have to kind of deadhead in or high cost fuel markets, right? So that's going to leave you with even more constrained capacity options. I think coverage time expands, right? It takes more
Yeah.
time finding yes. As a carrier rep, the good enough carriers, I say good enough. And again, between Delilah's Law and Montgomery versus Kareem, that will have big impact, more touches per
Mhm.
load. So we're already, I think, in a situation where the buy side is absorbing the volatility and the productivity loss before the sell pricing catches up, right? So the margin squeeze really silently creeps in like death by a thousand cuts, right?
Right.
Margin leakage on loads that you've already tendered or the contracts with lagging fuel schedules or that just aren't keeping up with the market Yeah, I mean, bidding is interesting, right? So
Mhm.
we our product does do term predictions as well as short term. So we can do up to a 12 months in the future. A lot of our customers are using that to help them respond to RFPs. So yeah, I think, you need to try to be as predictive as possible. And we can certainly
Yeah.
help with that when you're responding to try to anticipate what the market is going to do. But, I think that there are a couple things, right? Brokers are going to need to be, I think, a little bit more selective on what they respond to, right? Like
Yeah.
not responding to everything. And really just looking where they can serve best, understanding how they perform relative to their peers and whether they should bake in bid more aggressively because they know they perform better, and developing more strategic carrier relationships. So back at Manifest, we announced our capacity intelligence solution, which is really giving brokers more visibility to both in-network and out-of-network carriers and carrier reuse, right? So encouraging more carrier reuse and who are the carriers that have been observed to operate in your lanes,
Mm.
so that they can start establishing more kind of sustainable, repeatable carrier relationships. And going back to my earlier comment about the automation, right? Some of the relationships have been minimized through
Yeah.
automation, and I think that's going to need to change a little bit.
Yeah, I totally agree, especially knowing carriers and drivers, like, they still miss that human interaction, and they like that. So I think the, like, AI boom and the automation boom and stuff like it needed for a lot of the mundane tasks, but I think that what I feel like should have happened at that time is we should have as an industry focused on, okay, now that I have extra time on my plate, yes, I need more business, but I also can take a little bit extra time and call my carrier and find out how their mama and them are doing and like how's their kids and like building a real relationship. I think we
Yeah.
should have taken that time to do that. And I don't think a lot of people did. Some did, and I think those are we'll see who, wins in the end. But that's what I feel like will make you a winner in the end. So
Yeah. I think those are the people that are going to be set up to be real successful. And look, it's down markets create a lot of really bad habits. I think
totally.
there are a lot of free perkers out there that either didn't exist 7 years ago, or the majority of their carrier reps and sales reps are newer to
Yes.
the industry, and they've never lived through a market like what we're heading into. And I think it's going to be really eye opening for a lot of these companies, right?
Totally.
What we're kind of saying going into TIA is this feels different. The market is turning. Are you ready? Right? Did you
Yeah.
take that time to shore up your tech stack, shore up your carrier and customer relationships, right?
Mhm.
Be really selective about what's going to work for your business. So the reality is once the margin leakage starts showing up in your P&L, it's almost too late, right?
Yeah.
Like it's our
100%.
because margin leakage doesn't happen nice and smooth across your network. It happens very disjointedly. So people really need to be looking at margin at the lane level, at the customer level,
Yeah,
building
I
in
agree.
some thresholds for what's acceptable from a buy rate perspective, right? So there's a number of things that people can and should be doing right now.
Totally. And kind of going back to like you saying, like a lot of the hires that they have was after 2020, which totally changed the way that we all conducted business because we were all shooting out, like posting a load via our email and not even taking a phone call. That was a big thing. I remember even my old company who like when I first started, like I didn't even have access to a load board for I want to say it was 6 months to a year, where it was like, no, you're calling out on history. That's all you're doing is you're building relationships. That's all you're doing. You're not getting a load board unless if it's like desperado, but then the manager would post it and handle it, not you. So
Yeah.
that's how I was trained. And so that was like my core. And then I remember like after COVID, we all got sent home. And so then for me even it was like, okay, I can just easily cover this. And then our whole shift in culture changed over I was there for like 2 more years after that. And so then by the end of the 2 years, it was just post it. You'll get it covered faster than even that carrier will respond to you, your core carrier.
Yeah.
So, yeah, I think it'll be really interesting who did take the time and trained and did all the things that they could do for if the market does shift because it's not gonna ever not ever shift. It always will. You and me both have been in it where it's like, yeah, it always has waves.
Yeah. What goes up must come down and it'll
Mhm.
go back up again. It always does. No denying this last down cycle was the longest I've ever seen,
Yeah.
right? And we were all really hopeful. Well, you were trained the right way. Remind me again what brokerage you started at. I knew it at one point, but
Very small company. They're called Capable. They were called Connect Logistics back in the day, but Capable. Like I want to say maybe 5 other brokers in there. So a very small company, but it was nice because I trained that way and because it was a small company, it was like the grind was at a different level. Like taking care of the freight was a different level. I did high value and high risk freight. I did copper and electrical wire. So like I had to learn how to carrier vet, which led me to where I'm at now. And I think that's another point too, is because if you're not, whenever you do get to the point where you're like, oh my God, I'm so desperate. I finally hear a truck that gives me that rate and, oh, they don't really look the best, but I'm going to roll the dice and just see what happens.
yeah,
Like a lot of times, the fraud girl in me is like, no, please don't like stick with your processes. Cause that's whenever really they come in the hardest. To me, I think if it does stay in this course for 2026, unless if you are really diligent and stick with your processes, you're going to have a large, fraud and theft increase this year. So fingers crossed that doesn't happen.
yeah.
But
Yeah, I know. Look, from our perspective, we're saying it's really going to be about 4 things: is compliance, performance, and strategic relationships. That's table stakes, right? You're
yeah,
right. Is what you really need to understand. And your performance, your carrier's performance. I mean, I think it was Paul Estrada from Niagara. He had an interesting LinkedIn post. I think it was last week where he talked about the hidden cost of the cheapest carrier, right? In the
yeah,
routing guide. When you look at price and performance, and then bring in compliance and risk and all of that. The lowest cost carrier is often not the lowest
right.
cost carrier, right? OTIF fines, whatever the other penalties you may run into, safety issues. It's
Lawsuits, yeah.
yeah,
Especially with
lawsuits.
the big ones pending, like who knows what's gonna happen. And then
Right.
if something happens with your freight, I mean, it's definitely a weird time right now. And so it'll be interesting to see how even once we hit summertime, what goes on from there.
Yeah. Yeah. Well, I mean, fingers crossed for it. It's buckle up. It's going to be a wild year regardless.
Yeah.
But I think, again, we are seeing earlier than normal spikes outside of normal seasonality, like even produce, right? And that's
Yeah.
the really cool thing is with all this data that we have, we're able to watch some of the growing regions and we can see year over year when did the harvest start, right? And it moves. It moves from the southeast or from the south to the north, and we're seeing it happen earlier this year, I think.
Yeah.
And then with all the construction, data centers, and other kind of infrastructure projects and things like that. So
Yeah, I feel like that's why kind of flatbed is at its peak, I think too, is because of that. No, I think it's funny with AI, you would think now it can kind of take in the weather and then how produce actually grows. And okay, we've been warmer than this early spring and especially, southern states. So yeah, I guess it makes sense to start a little bit earlier. But I know like I've heard in, Texas where they're like southern Texas, whenever that's kind of where it starts at, they're having a very hard time even not even just rate-wise paying, it's just convincing drivers to take that type of freight. So, compared to, "Hey, I can pick something else up and I'm not having to deal with produce," where I think before people were, like, chasing watermelons and chasing all these things because
yeah.
they knew it paid the best, but now it's like people adjust, so it'll be interesting for sure.
Yeah, I mean, and that's a great point because carrier acceptance signals they change before rates, right? That
Yeah,
that is the earliest tell, both from a hard nose and soft nose, right? The soft nose or the no responses, or if it is a routing guide tender, they let it time out, whatever the case may be. So that's the first sign, right? And those are the
yeah,
things to watch. And then the next thing is carrier mix deterioration, right? So the best carriers usually exit the best, meaning the most well run, right?
yeah,
Usually exit a lane first, not the worst, right? So you're still
mm,
covering your freight, but usually with weaker reliability and higher hidden costs. So you're trying to replace your preferred carriers, right? And then the
yeah,
operational drag hits, and then the market margin leakage hits, and then the service failures hit. So yeah, we're seeing that. We're seeing that
yeah.
already.
Well, I think it's smart that you guys definitely took in the performance card and then having the capacity card with the rating as well, because then that the hard times that you do have trying to find capacity, clearly you guys have the solution. So that's awesome and way to think ahead. I feel like you guys knew this was going to happen. Of course, you're predicting the future, and so you knew it.
Yeah, yeah, that's it. Yeah,
Yeah.
that's it. The timing was perfect. Timing was
Right.
perfect, but yeah, we're really super excited about the capacity solution, and again, bringing together the price performance capacity just under a single umbrella and really being able to help our customers both with the spot and the contract freight. We've got some RFP tools coming out this quarter, so yeah, being able to do even more there. Yeah, it's been an exciting year.
That was the worst part of the whole year was whenever it was RFP season. I'm like, "No." I never went home and I worked till
Yeah,
9 o'clock and it was awful. It'd be whenever I hear anybody say, "Well, we have a RFP tool," I'm like, "Really? I wanna hear about it."
yeah.
Yeah.
Yeah, well, you'll be hearing we'll come back on and talk more about it when it comes out. That'll be coming out
Awesome.
probably next month.
Very cool. Well, thanks so much for coming on. I really appreciate your time. I learned a lot as always. So how can people reach you guys and, get in touch and, sign up for Triumph Intelligence?
Yeah, you can follow us on LinkedIn, so Triumph for Brokers, Triumph for Carriers, or we do have our market intelligence, Triumph Market Insights, or TMI, as we like to call it. So definitely follow us there. Our website is tfin.com, or you can always reach me at dfavier@tfin.com, and would love to talk to you more.
Love it. Thanks so much. I really appreciate your time.
All right, thank you. Thanks for having me.